Hello, everybody. Welcome back to another episode of CoinLogic TV. I am your host, The Logical Dude. In today's video, we're continuing with our Trading for Beginners series, and we're talking about the Bollinger Bands. In this series, we're breaking down the top 5 technical indicators used in trading into simple as I can make it for you. We'll just put it that way. Simple to easy to understand terms. If you like that kind of content, make sure that you like the video, subscribe to the channel, and hit that notification bell if you're watching YouTube so that you're notified when we put out more videos. Because I've already done a video for the moving average, the RSI, and we've got one for the stochastic RSI and the MACD coming out this week. So make sure that you hit that notification bell so that you're notified when we drop those videos. Or you can come and follow us on freespeak.tv and the Hive blockchain. We are coinlogic.online over there, representing true Web3 social media. Come and check it out. Come and earn some crypto for your time versus sitting around on YouTube or Twitter or Facebook and you're not earning anything. Come and check us out on Hive. Earn some crypto for being engaged in the community. It's well worth it. You might meet some new friends over there. Who knows? But now that we are done with that housekeeping, because that's not what this video is about, let's get right on into the Bollinger Bands. All right, so what are the Bollinger Bands? So they are a type of technical indicator that's used to measure volatility in the market. It was invented in the 1980s by a dude named John Bollinger. So, it's fitting that they gave this indicator his name. So what it is, it consists of a simple moving average, generally a 20-period moving average. I'm going to use the daily time frame on our charts here just for simplicity. All right, just makes things a little easier to say the 20-day moving average. Okay, so and then it also has 2 lines plotted, one above it, one below it, and those are called standard deviation lines. So the distance between these 2 lines and the moving average is determined by the volatility in the market. So if you got a really tight range, not much volatility going on. The wider these things are, though, the bigger price swings that are happening. All right, and the Bollinger Bands are used to help identify buying and selling opportunities in the market using a mean reversion strategy, among others. But the mean reversion strategy is really kind of like the main one used with Bollinger Bands. And what that means is that no matter how far the price gets away from its average, it's always going to revert back. So think of it like a rubber band. Okay, so the more you stretch it, the quicker and harder it's going to come back to its average size. It's the same kind of premise here with the Bollinger Band. So let's get right into the charts, and we're going to take a look and see how these things work. So bear with me just a second here. Okay, guys, we are here on our Bitcoin daily time frame. We're going to come up here to our indicators and we're going to hit Bollinger Bands. I've already got it set in my favorites, but you can type in BB into the search and it'll show up under your technicals. I use just the basic default trading view indicator. So you can click on that, click on the star to add it to your favorites. All right, so let's talk about how this works, right? All right, so the moving average, which is this white line through here, this is the moving average that everything is based on. All right, so the default is set to a 20-period moving average. You can actually change this in your settings to a different setting. So let's say if we changed it to 10, it would make the Bollinger Bands, the standard deviation lines, a lot tighter because it's following a tighter moving average. All right, the popular length is the 20-period moving average. So if you're just starting out, finding your way, just use the basics. Don't get fancy just yet. Okay, once you start learning your way, you start, you got to crawl before you can walk, and then you got to walk before you can run. All right, so when you start adjusting settings like that for your indicators, that's when you're basically running. That's when you have a full knowledge and understanding of how this market works, and you are at that point adjusting everything to fit your strategy. That's when you're running with your playbook and you're feeling good. So for now, use the default indicators. That's my personal suggestion, not financial advice. All right, but back to how these things are used. Right. All right, so you've got your so the moving average is the baseline. All right, so you've got your 2 standard deviation lines, one above, one below, and the distance between them is that measure of volatility in the market, all right? When it's all skinny and you don't have much action going on here, it's not very volatile, all right? So there's not a lot of price movement in here. But when these things start to open up one direction or the, and you get these big bulbs starting to form, that's when you got some price volatility happening, all right? So depending on what side of the moving average the price is on is going to dictate which direction this thing's going to be opening up and the trend's going to be heading, right? So if the price is crossing below the moving average and it's happening with some force, all right, you're going to be looking at this downward movement. So like this rubber band, the more that these standard deviation lines get stretched, the more the price deviates away from the average, the more it's going to want to snap back to it, all right? So the average may actually snap back to the outside bands, all right? That happens. So it's going to want to come back to its resting place and just kind of chill out for a little while, all right? And then it's going to start getting stretched out again, and then it's going to come back. And then it's going to get stretched out again, and then it'll eventually come back. That's basically the mean reversion strategy of how it's based, is that the further away from the average that the price gets, the harder it's going to come back. Or the average is going to move it. So that just depends on the trend, the price trend. So another way to use this in Bitcoin trading, or really any other trading, any other asset, again, we just focus on Bitcoin trading, is to use these as basically an overbought and oversold indicator, similar to the RSI. Link is in the description for that video below. So when the price hits the bottom edge of this Bollinger Band right here, it's considered to be oversold, and you can expect a price reversal. It's going to pull back towards the median. Same thing when it hits the top edge of it, it's considered overbought, overextended, and you can expect a reversal and to come back. Back test it. It works, so you can also pay attention to the moving average, all right? Because this thing can cross over, break up, break down, but it also can be found as resistance or support. So if the price is finding this moving average as resistance, we're in a downtrend, all right? You can't fight the trend. You just got to trade with it at that point, all right? When it crosses up and it keeps bouncing off the moving average on the upside, then you're in an uptrend. Then you definitely want to be long the price at that point, okay? So one good way to kind of, play this is if the moving average is starting to cross, is starting to move up, the price crosses up, the moving average is going up, and say the first time it hits the standard deviation line, that could be a good time to go in, all right? Just if you want confirmation, just using this. And if we've got a big price swing coming up on the moving average, that's a good indication of a change in trend. So if you went long here, and then you went short when this thing crossed back under the moving average and touched the bottom Bollinger Band, you're still looking at a 14.6% gain. So, I mean, yeah, that's a long span of time, but, again, this is just the daily time frame. This thing works all the way down the time frames. Like, this is the 5-minute time frame. All right, so that works really well on intraday time frames. It really helps with price volatility on those kind of swings. The daily time frame is just an easy one to kind of just use as an example. So this is the 5-minute time frame. You see here how it's just really tight, but we are over the moving average. It starts to break up. Well, if you would have gone long here and then you would have shorted it, then you would have gotten out of your long up here when it crossed under, you would have made, let's just see this. So if you would have entered here, exited here, all right, 4.92% over a 4-hour time frame. Not too bad. It's a pretty decent run. If you were 10x leverage trading this, that would have been a 49.2% gain to your portfolio in the matter of 4 hours. All right. So this can be a way to be able to play those kind of swings like that. It can also play the opposite direction. You can play it down like that too. You can use it to short, but you can also use it to just play these little intraday swings here. So let it come up. Say you would have shorted here, close your trade, you would have made, you know, a little bit, not a big trade, but it's something. You know, if you would have said long here and closed out your trade here, 1.23%. If you're intraday trading, you're using leverage. I like using 10x leverage when I'm trading like that. Then, yeah, that would have been like a 12% gain. You know, just a matter of an hour or so. So it just depends on how you're trading. It's your trading style, but the Bollinger Bands can be a great way to help you make those decisions on whether to buy or whether to sell. Yeah, so definitely a tool to add to your toolbox and figure out how you can integrate that into your trading playbook. To wrap this whole thing up here, so the Bollinger Bands are a very powerful tool used by traders to help measure volatility in the markets, and it's also used to help measure overbought and oversold conditions. But I reiterate this again, none of these indicators are meant to be used by themselves, okay? They're meant to be tools to be able to get confirmation on your trade decisions, okay? So put them together with other indicators, price patterns, all that kind of stuff, support and resistance. You want to make sure that you are using all the tools at your disposal to help make the best decision for your business. Because remember, trading is a business. If you don't look at it like that, it's gambling, and you don't want to gamble, okay? You want to be a good business person, all right? That's what this is. It's a buy-sell business. You're buying low, you're selling high. And what is great about having these tools at your disposal is that when you put them together, it helps you make the most informed decision possible. All right, so that's what this is all about. All right, so don't just throw a Bollinger Band on and think that's going to be the only thing that you're going to need to trade. Don't just throw an RSI or a moving average on and think that's going to be the only thing that you need. No, you need to use these all in conjunction, and we'll get into other videos on how to put these things together to make better trade confirmations in later videos. So again, like the video, subscribe to the channel, make sure that you're hitting that notification bell on YouTube so that you know when we drop more videos like this. And then also come check us out on Hive. Really cool place to be. Your wallet address is your username. You get involved with the community, you build reputation over there. It's just good stuff. It's a good global group of people. We've got a niche for just about anybody. Come check it out. In the meantime, also go watch the moving averages video and the RSI video. Really, any other video on the channel. We're going to keep this coming. We like the education stuff here. We want to be a nice, informative channel. We want to break stuff down for people. So again, give us a follow. We appreciate it. Y'all have a great rest of your day.